Hello, all of you. CA Dipti Chheda here. So let us begin the concept of cost of capital. I hope you are taking all the notes in your booster notes. We have already done the booster conceptual revision lectures. All are uploaded in the playlist. If you go by the playlist to watch, like we have already completed for material, for labor, in costing, and in FM, I have already made 2 videos for how to interpret the balance sheet when you do the ratio analysis. Before that, you should have an idea of the balance sheet. So make sure you take all the notes from this conceptual videos and then solve your problems. Please make it very clear. Many messages I am getting that from these videos can then we start solving the problems. No, dear students. These videos are for revising the concepts, but you need to download Concept Classes app and solve the problems with me to get into the track, especially for the new students. But if you already know what is cost of capital, this is going to be a logical learning of cost of capital, wherein you don't have to mug up the formula, what is KD, what is KE, what is KT. Okay, so let us begin very quickly. I'm sharing the screen so that we all can write here. Okay, 1 second. Yeah, this is the last video. If you have missed, do watch it. I have explained that when you start with the ratio analysis, how you interpret the balance sheet when you want to make the balance sheet and all. So, what is the name of this chapter? Cost of capital. When I put in business my capital in the form of share capital, it could be anything. If I'm putting equity, and for cost they use K, so it is KE. If I am putting preference capital in my business, then we call the cost of the preference capital which I've put in business is KP. Now, if I'm putting debentures, this is own money, this is loan money. If I take loan from the market in the form of long-term debentures for 6 years, 8 years I have issued, and I need to pay interest on the debenture holders as I need to pay dividend to the shareholders. So for debenture holders, this is KD. Nice. Okay. Now, after the KD for the debenture holders, suppose if I take long-term secured loan from banks, can I call it KL? Right. So this is all covered in sources of finance, another chapter. Once there is a startup, a company starting, they may decide the proportion. 40% we'll put our own capital, 60% we will take loan from the market. So what should be the combination and all? That is another chapter, capital structure theories. That shows you what is the best combination. How much you should put your own money, how much you should put loan money, how much should be the ratio of the debentures. This chapter, we are right now doing what should be the cost. So let us start with debentures. This is the logical understanding. If I say this is the formula, fill up the rates and you get the answer and do it in the exam, because cost of capital comes for 10 marks. Marginal cost of capital, overall cost of capital, this all is called as KO, cost of capital, cost of equity KE, KP, preference, KD and KL. So fine. If you want to go by that format, this is the format, dalo figures karo, but you should understand. And if you understand, your speed will come, you will be able to complete the problem in 3 hours, even if there's little twist. So now, suppose I issue rupees 1 lakh debentures at the rate of 10%. Okay. You can take down the notes with me, and if you wish, I will wait once I complete the example so that you all can write. Now, 1 lakh debentures when I'm issuing at 10%. If I say what is the cost of this 1 lakh capital I have generated from outside and I have put in my business, what is the cost? What is the cost of this capital which I have generated from outside and I have put in my business? Then the cost is, you can say, ma'am, 10%. What is the cost of the interest? 10%. So 1 lakh ka 10% is 10,000 interest I am paying. I am explaining the concepts of figures and all. I'll take a very simple. Otherwise, we can use calculator also, right? So what is the interest I'm paying in the market? 10,000. So what is the cost of the debentures? 10%. But then this 10,000 interest is before tax. And interest on loan, interest and debentures, is it allowed as your expense in the business head? Answer is yes. Then if you are showing, if you are paying interest to outsiders and debiting it in your P&L account, are you reducing your income? Yes. Are you saving tax? Yes. Suppose your profit was 50,000 and on that 30% tax you have to pay. Now, because you are paying interest to the debenture holders, your profit has come 40,000. And now you are paying 40,000 income pay 30% tax for the company. Earlier you were paying 50. So this 10,000 interest is allowed as business expense. So am I saving 30% tax? Yes. So now what is my KD after tax? What is my cost after tax? Then can I write 10%, 100 minus tax rate? Don't write, I'll give you time to write. I'll take pause and I'll give you time to write. पहले आप सिर्फ स्क्रीन पे देखो, समझ लो. I am paying 10% interest, but that is allowed as expense. So after tax, if assuming that the tax rate is 30%, can I say after tax, my out of pocket tax, मुझे interest on, if I take in 1 lakh rupees from market in the form of debentures, what do I have to pay? 7%. Same if I pay from bank also, that interest is also allowed. How much do I have to pay? 6%. Which one is cheaper? Bank loan. Depending on how much limit they are giving, what is the repayment schedule, there are other things. See, don't say why we are studying all this. If you want to buy a two-wheeler and four-wheeler on loan, you decide, shall you take 2 years loan, 5 years loan, EMI, shall you pay monthly, quarterly? So you work out, no? So we are working that if I issue 1 lakh debentures, what's going to be my KD, cost of the debentures? Now I'm twisting this little bit. Okay, these debentures are issued, say, issue price face value is 100. But I have decided to redeem debentures at 110 after 10 years. I said to debenture holders, I will issue the debentures at par, pay me 100, but I will repay you 110. After 10 years, I will redeem 110 after 10 years. Then, in that case, apart from the interest, do I have to pay this difference 10 rupees premium also? There could be other option. If I issue at 98, 2% discount, and if I repay at 110, this is the issue price, and 110 is the redemption value. Redemption value means after 10 years, I'm going to pay you 110. Right now, I'm taking 98 from you. So how much is my loss? 12. And do I have to pay this 12 rupees loss? Can I cover it up over 10 years? So every year, should I bear 1.2 cost per debenture? Just per debenture. I hope you all are getting. Huh? I think till I'll give you time to write. Till here, is it clear? What is the cost of the debentures after the tax benefit? 7%. But this is when face value and redemption value is equal to 100. That's fine. Now I have twisted the case. I said face value is 100 or say 98. I've issued at, can we issue shares at discount? No. Can we issue debentures at discount? Yes. So I've issued at 98. All these journal entries you study from foundation. Issue at par, redemption at premium, issued at discount, redemption at par and all. So I've issued at 98 and I'm going to repay you 110. 12 rupees is my expense and I have issued for 10 years. Can I put 1.2 as my expense every year? Now what is going to be my cost? KD, interest plus average premium. Now, these are the terms I am introducing. What do you mean by average premium? Whatever average premium, whatever is your cost of interest per debenture, 7 rupees is going out of my pocket. Actually, dear students, I am paying 10 rupees, but 3 rupees I am getting tax benefit. 7 rupees is going plus per debenture 1.2. So, what is my cost? KD 8.2 per debenture. Ma'am, every time we have to calculate, yes, if they give you redemption value and issue price. Now, I can't say 8.2 rupees is the cost on 100 rupees face value. Answer is wrong. Because I didn't get 100. I paid you debenture holders 8 rupee 20 paisa per debenture. I paid you benefit. But did I get to use 100 rupees for my use? Answer is no. Next comes average liability. Average liability is issue price plus redemption value divided by 2. How much did I issue for? 98. How much did I redeem and repay you after 10 years? 112. So average, how much money did I use? I hope you all are getting, we always do this average. So I paid you 8.2 is my expenditure, but I didn't get 100 rupees to use. I got only 98 and I'm going to pay you 112. So average, how much money I am using? How much money? Don't worry, I'll give you formula also. I'll give you this also. 105 rupees I am using. Average. 98 plus 112 divided by 2. Average. 105 rupees. Now can we, and also I'll give you the formula for average premium. Average premium. I'll write it nicely. When I say no, sometimes I write it very quickly. Are you following all these concepts? I'll give you time to write. I'll share you the file also, printed file, which we give in the class while regular coaching. So once you understand this logical magic of the formulas, these are not formulas. These are derived with some logic. And now you are at learning stage. So 5 minutes concept we are doing for 50 minutes. Absolutely okay. Once you learn it and then start practicing, repeat. After 3 to 4 days, you will get a good speed. KD is this. Yes or no? Now, average liability is clear. I'm getting 98. I'm repaying 112 divided by 2 is what I'm using. Now, average premium. Average premium के लिए redemption value minus the issue price divided by number of years. What is the redemption value I'm going to repay? 112. Sorry, 110. Sorry, 110. I'm going to redeem or repay you after 10 years, 110 rupees. What is the issue price? 98. Divided by how many years? 10 years. So per year, how much? 1.2. Are you getting? Average premium is the additional cost. Average premium when issued at discount and redeemed at premium. Issued at discount, मेरा तो 2 रुपए कम आ गए. Redeemed at premium, I have to pay you 100 rupees, 10 rupees extra. So now it is clear. Now can I say what is the formula? KD is equal to formula. One line simple formula. Interest 100 minus tax rate plus average premium divided by average liability into 100. This is the out-of-pocket cost per debenture. So what is your interest? 10%. 100 minus 30% tax saving ke baad. What is your average premium? Actually, it is 112. 12 rupees, but 12 rupees over 10 years. So per year 1.2. And how much money average you are using? 105. Why am I doing it in 100? To get percentage. If you don't want to do it in percentage per debenture cost, then you will get the answer directly. So this is coming to 7 plus 1.2, 105 into 100. I am paying out of pocket 8.2 rupees. I have done this here also. See, 8.2 rupees. Divide by 105, and 105 average I'm using. I'm using 98. I'm repaying 110. Yes. So average I'm using 105 rupees. So 8.2 divide by 105 into 100. Finally, what is my out of pocket cost? 7.81%. Round off till 2. 7 point. If you know face value was 100. If you want, I can write and show you. Face value 100. Redemption value 100. Average premium is nil. Then what will be the KD? फिर KD कितना होगा? 7%. Just 7%. KD will be just 7%. Is this clear to all of you? Right? So this is how we will be doing this. Yeah. Now you take down and I'll make you write something more. Or let me share. 1 minute. Huh? Take a pause here. I'll give you time to write everything. 1 second. Yeah, look at this. This is all given to you in your material. Yes. When we start this new topic, this is the material. Phone silent पे रखना भूल गए. 1 second. Yeah. Now, what is the KD? Look at the screen, please. Look at the screen and try to visualize with me. KD, cost of the capital. Interest into 100 minus tax rates divided by net proceeds. Whatever proceeds you get. Please, always it's not that complicated. Average premium and all. Okay, right. Next is KD is interest into 100 minus tax plus average premium divided by average liability. Now, what is average premium? Redemption value minus the net proceeds, what you get in your hand. Discount and issue related expense bhi to ho sakte hai na? Divide by number of years, because you want to debentures, irredeemable debentures nowadays no one is issuing. So you are issuing the debentures for 6 years, 10 years. You can divide this cost over the number of the years. And then redemption value plus net proceeds divided by 2. This is your average liability. This is the formula which is printed in the book. But against that, you have to write that detailed analysis for one so that it is clear to you. Okay? All right. Is the formula clear to all of you? So if they ask you in an exam, and you know one formula, you know the others are going to be very easy. In the second part, I'll teach you the preference shares and the equity shares, which is going to be like super easy. Yes. So now, interest divide by net proceeds into 100 if the redemption value and face value is 100. If face value and redemption value, there's a difference, issue related expense, or you have given discount, or you have decided to repay at premium, then interest plus average premium divide by average liability. What is average premium? Redemption value 110 minus the net proceeds, say 98, divide by number of years. What is average liability? Redemption value plus the net proceeds divide by 2. Okay? Did you understand this logical magic? Cost of debentures एकदम बिना देखे भी आप कर सकते हैं. I am paying you 10,000 interest on 1 lakh, but you are giving me only 90,000. So my cost is not 10% debentures, because even though I issued you 10,000 interest I paid. See, I hope you all remember very basic. Irrespective of the market price, this we do it in accounts. Now we are in FM, we do this in income tax. Irrespective of market value, debenture interest and shares dividend is always calculated on face value. So even though I am paying on 1,10,000 interest, how much you are giving me the money? Say 90,000. 10,000 kuch expense ho gaya, whatever. So my cost is going to be higher. So to compare the cost, which is beneficial? Should I issue debentures? Should I go for more equity? Should I take bank loan? I should know the KD, KPK. See, if you understand why you are studying this chapter, and this is superb. So many professionals, CAs are involved in project financing work. This is all it. They help you get the finances from the bank by making project report, by putting ratios and all this. And this is a superb area. Chalo. As I promised, I'll share the screen so that you all can write. Write down. I'm here only. You all can write. लिख लो आप लोग. One lakh, 10% interest is 7%. This was extra, huh? Sorry, please, if you don't get confused. What happened? 1 second. Yeah. So the income of the company was 50,000. But if they pay 10,000 interest, now it's 40. So interest is allowed as expense. Interest is allowed as expense. Yeah, now write down this. Interest is 7, but average premium, just now we calculated here on the right hand side, average premium. And if you still feel my speed is little more, pause the video. You all are watching this as recorded video, pause it, learn it, and then solve the problems. In FM, one chapter is capital budgeting, one is cost of capital. 10 marks weightage is minimum. Extra, they may ask you in question number 1, but bare minimum 10 marks questions they are asking you to solve. What is average liability? Issue price plus redemption value divided by 2. Average premium. Redemption value minus issue price divided by logical exam. And finally, what I showed you, what is printed in our book. KD, interest. Ma'am, if the redemption value and face value and all is 100, this is not going to come. Average premium will not come. if face value 100, redemption value 100, average premium will not be there. एक स्टार मार्क करके लिख दो. Average premium will come when you have some debentures related cost or discount or redemption at premium and all. So this is going to be your KD. Please make sure if you're just sitting and watching these videos, it won't help you. Costing and FM is like maths. You need to put it on the paper, and then if you understand it, if you like this logical magic, without fail, put a comment below the video. Hit the like button, hit the notification so that when I come with part 2 of this, you get notified and you can enjoy this logical, conceptual learning, logical magic I call of the formulas. This is not a formula, this is understanding. I have to pay interest after tax, plus I have to bear average premium. And against that, I'm not using 98 or 110. Average, how much I'm using? 105. Clear? Right. If face value and all is same, then the cost will be 7. I told you. If face value is 100, redemption value is 100, then it's going to be 7%. That's all for the logical, magical part 1 of the cost of capital. These are all conceptual videos. You watch it 2 times, 3 times, write down the notes. For sure, you will understand. From years, I've been teaching it like this. Never I give all these steps and all printed. You have seen the printed material also I've shared. There's a formula. But at least in booster notes, if you write this 2 to 3 times, in exam, you'll do it very fast. KD is equal to interest 100 minus tax. KP is equal to preference dividend, whatever. Yes, right? So wait and watch the next part. Thank you so much for watching the video till end. Signing off now. See you, Dipti Chheda here. Bye-bye. So did you enjoy these conceptual learning? If yes, then below the video, the link is given for our Telegram group. You can join for concept classes app. You can download. Lot of videos are there in the free content also along with the PDF material. So whole chapter, you can download the material. You can watch all the videos in detail and do learning. Lot of theory questions, other PDFs are all included. Okay, right? So do connect with us with all the links below. If you have any query, you can write a mail and you can connect with us through the link, and would be more than glad to help you join our concept classes app community, waiting to welcome you all, right? Thank you so much. Wish you very all the best. And if you really like these kind of the concepts, hit the notification button, hit the like button so that you're notified next time when we are taking a lecture or we are uploading it in the YouTube. And do share this video with friends. Do comment below the video for any query also, any doubt also, and if you have really taken some value addition. I'm on a mission to help more than 10,000 students. I really want to help by putting lot of value addition with the way I have learned. These all subjects are interlinked: account, tax, costing, FM. And you will enjoy this interlinking knowledge. Wish you all the best. Thank you. Bye-bye.